Dear friends, if you are a small business owner and are not maintaining your books, this video is for you. If you are recording your business expenses and income in a paper, or maintaining it in an Excel spreadsheet, or you're collecting all of your receipts in a shoebox and handing it over to your accountant end of the year just so they can file your tax returns, then this video is for you. My name is Jayanti Ganapathy. I am the owner of FinAccurate. We are an accounting firm based in Boston, Massachusetts. In this video, I'll be covering what is bookkeeping, why is bookkeeping important, how you can maintain your books, what is the frequency in which you have to maintain, and when it is recommended to hire a professional to maintain your books. So let's get to it. What is bookkeeping? It is the activity of keeping records of the financial affairs of your business. Why is bookkeeping important? I covered this in 5 points. Number 1, to claim tax deduction. If you maintain your income and expenses on a regular basis and without missing any of the transaction, when it comes to year end, when you file your tax return, you are making sure you are claiming all of the legitimate income and expenses when you file your tax return. So you maximize the deductions that you are eligible. So you are paying the right amount of taxes for your business and also for your personal. That's the number 1 reason why you have to maintain your books as a small business owner. Number 2 is for business loan purposes. As a small business owner, you might be approaching a bank or a financial institution to get funds for your working capital, to hire a staff, or buy inventory, or it could be any number of reasons. So what is the very first thing a banker or financial institution is asking of you? It is your business's financial statement. What is a financial statement? It is your income and expenses statement and a balance sheet. So that helps a banker or financial institution determine how much funds they can loan your business. So that's a primary document they are looking for. So without having a proper record of your business financials, it is very difficult to approach a bank to ask for a loan. And also, if you are applying for any government reliefs or grants, the very first thing that you have to produce your business's financial statement. So that's another reason why you have to maintain your books. And the third reason, if you are maintaining your books on a regular basis, on a day-to-day basis or a monthly or quarterly, it helps catch any financial errors that has happened in your business. It could be any fraudulent transactions, which happens a lot when we use your credit card and bank or debit cards. That has happened a lot with we have seen happening with small businesses. There could be fraudulent transactions or duplicate payments that you made, or if your staff is stealing money from you. All of this will be caught if you are maintaining your books and reviewing it more frequently. When you look at your income statement or expenses, you can clearly tell this doesn't make sense. I didn't pay so much for this repair. I didn't pay so much to buy this product. So there you can easily catch if there are any duplicate payments or any fraudulent charges, and it's very easy. If it's caught early, it's very easy to work with the financial institution, bank, or credit card agency to fix those errors. Or if it's your staff, having a conversation with them and fixing it. It has happened with our clients. They caught it very quickly, and they had to fire the staff who was stealing money from the business. So these types of errors and mistakes can be caught early on if you are maintaining your books and also reviewing them on a regular basis. It's just not maintaining the books. Or you, as a business owner, you should be looking at your financial statement on a frequent basis. I'll be covering what is the recommended frequency later. So, but that's another reason why you have to maintain your books. Do you know what is the major reason most of the small business owners fail? Because they did not know the financial position of their business. Are they making profit in the business? Are they pricing their product or services correctly? Are they making a profit margin on their product or service that they're providing? Without maintaining your records and accounting, it's very hard for you to understand if your business is running profitably or not. So that's the major reason why you have to maintain your books, so you understand if you are running a business on a profitable basis. And having a proper record, day-to-day record of your transaction forms the foundation for you to prepare forward-looking statements. What is forward-looking statement? It's budgets or forecast or cash flow. So having a good handle of your cash position is very critical for small business owners. In order to know your cash position, the foundation for that is to maintain your day-to-day transactions in an organized form, in either if you're maintaining an Excel spreadsheet, or if you're using a software, making sure the day-to-day financial transactions are recorded and it's organized. You're able to look at a reliable financial statement. Then you can base those statements to prepare your budgets and cash flows. So those are foundational aspects of having a all-round financial information for your business. And the fifth item within why you have to maintain your books is if, as a small business owner, we see this a lot, mixing your business and personal expenses. And this happens a lot, especially in the startup stage, when there could be reasons why your business bank account was not set up, and you spend out of your personal money, or could be personal credit card that you use to buy some of the business products or business expenses. If you spent it, there's nothing wrong in using your personal credit cards or anything, but making sure you are recording that expenses in your business is very critical. Otherwise, you are going to miss out on those expenses. You are not going to claim those expenses when you file your tax returns. So mixing your business and personal, if you are doing that and if you are maintaining your records, you will recognize that very early, and you will reclassify your personal expenses into the business expenses if it was spent for business. So that's another reason why you have to maintain your books on a regular basis, meaning more frequent than at end of the year. And the third aspect of why bookkeeping is so I understand why I have to maintain the books, and what is bookkeeping and how do I maintain the books myself. I highly recommend using a accounting software to maintain your books. For small businesses, the big ones are QuickBooks and Xero. And I will be covering, depending on your revenue range, when you can start using the accounting software. So it's definitely recommended using a accounting software to maintain your books, instead of doing it on paper or using Excel spreadsheet. Doing it on paper, definitely it takes more of your time. If you wrote something, if you missed to write down some expenses, you will have to go back and put it in the respective month. It takes more of your time to maintain it, and if there are anything that's missed, you have to go back and fix it. It takes longer to maintain it on paper. So I definitely don't recommend recording your business transactions on a paper. And the next thing we see is people using Excel spreadsheet, which is okay if you're at certain level in the revenue of your business. But I don't recommend using Excel spreadsheet either, because in Excel spreadsheet you could be recording your expenses and income, but it doesn't tell you the financial position of your business. It doesn't show you whether you're making profit. It's very hard to track in Excel spreadsheet to know your business net profit or financial position of your business, and from there on to build your budget and cash flows. It's a lot of manual maintenance to track everything in an Excel spreadsheet versus going for an accounting software. And there are a lot of softwares that you can use, but we recommend QuickBooks or Zero. And for self-employed small business owners, there are lowest monthly subscriptions available. So the money that you pay for the software is pays for your time. So it is very inexpensive, and it's definitely worth your time. So trying to save the subscription money and trying to do it yourself is not going to help you in many ways. So having a software definitely helps not only see your income and expenses, but also see your financial position very quickly. And also having a software makes you take the next step of hiring a professional to maintain your books when you get to that stage. So the next aspect of the bookkeeping is what is the recommended frequency. I covered this based on the revenue that you as a small business owner make in that business. So on an annual basis, if you are generating more than 1 million in revenue, then I highly recommend maintaining your books and reviewing your financial on a monthly basis. If you are doing 500,000 to 1 million in revenue, the bare minimum recommended review frequency is quarterly. And if you're doing anywhere between 250,000 and 500 in annual revenue, 500,000 in annual revenue, then I highly recommend doing a mid-year review and second review in October if you're doing January to December as your fiscal year, doing a review at October, and then a third review by end of the year, by end of December. So right after end of stock, a few weeks in January. So the third review should be done by then. That's a bare minimum recommended. And if you're doing anywhere under 250,000 in annual revenue, I recommend maintaining and reviewing your books in October. That's number one. That's bare minimum. And then in December, end of December. Doing a review in October helps make sure you miss something, and if you have to work with the banks or the staff or anyone to collect those missing information, you still have 2 months, November and December, to fix all that, and you're more prepared when it comes to end of the year in December. That's why a bare minimum for any small business owner to review the financials is the first one in October, and then the next review by end of the year in December. And the fifth aspect, when do you have to hire a professional? Again, I recommend this based on the revenue that you generate in your business. If you are doing anywhere if you're doing 500,000 or more in annual revenue, then I would highly recommend you hire a professional bookkeeper to maintain your books. At that revenue level, it doesn't make sense for you to do the books yourself. It is not the best use of your time. So hiring a professional at that time is highly recommended, and it will pay for itself when you are not spending your time and you're focusing more on growing the business. So it is highly recommended you hire a professional when you are at 500,000 or you're going over 500,000 revenue. Then doing the books by yourself is not the right way of spending your time as a business owner. So those are the 5 aspects of and the importance why you have to maintain your books. So why bookkeeping, what is bookkeeping, and how you can maintain the books yourself, and what is the frequency, recommended frequency, and when you have to request professional help. So these are the 5 aspects we saw in this video. If you want to know more related topics, please click the subscribe button below, and also click the bell icon, so when we produce more videos like this, you will be notified pretty quickly. So I will see you in the next video. Thank you.